today we're reporting another set of very good results, and in fact another record year. I think I put that down to three things. One, a very clear strategy of organic growth and self-help. Second, a very strong balance sheet which enables us to make the right long-term and medium-term decisions for the business. The third is we've got some great teams of people who are doing a brilliant job making our businesses better and better for all the stakeholders. As a construction and regeneration group, our total commitments are absolutely fundamental to our business. We've been concentrating on all of them in the last year, but perhaps with particular emphasis on enhancing the communities and improving the environment. We had a very good year last year, and the group has a tremendous momentum, and it's that momentum which is carrying us forward.
And as John said, 2019 has been another good year for us. Revenue at 3.1 billion was up 3%. Profit before tax at 90.4 million was up 11%. And this really does demonstrate the focus we've had on operational improvement and improving the overall quality of the business. And we've had another good year for cash as well. Our average daily net cash for the year was 109 million, which was up 10 million from the prior year. And the year-end net cash balance was 193 million. So a really strong balance sheet and a really strong cash position for the group. We've got a really high quality workload. The secured order book at 7.6 billion is up 14% from last year, and that stands us in really good stead for the future. In the medium term, we've today announced medium-term targets for each of our divisions, which should show the direction of travel for us over the next few years. And such is our confidence in the future and the way ahead that we've increased the total dividend for the year up 11% to 59 pence per share. In construction infrastructure, our continued focus on operational improvement, contract selectivity and disciplined risk management have all led to another increase in the margin. This time the margin increased to 2.2%, which in turn led to operating profit up a strong 20% to £32.3 million. Fit Out delivered another good performance. Its profit at 36.9 million was a margin of 4.4%. Coming into this year, its order book at 480 million was up 2% on last year, so demand for Fit Out remains really high, so it's good prospects going forward. And similarly, Property Services performed well in the year. With revenue up 15% to £115 million, its margin was up to 3.7%, delivering an operating profit of 4.3 million. This on the back of increased contract efficiency and operational improvement through the really strong IT platform that it has now. And on the regeneration side, a year of significant positive progress for Partnership Housing. Its operating profit was up 50% to 18.3 million, driven by operational improvement across both the mixed tenure part of the business and the contracting part of the business. And in urban regeneration, there's been a lot of activity right across the diverse development portfolio. It delivered a profit of 19.4 million and a return on capital of 19%, right up where it needs to be. While the strategic importance of investments to the business was demonstrated by the further significant progress made across all of its joint venture property partnerships, which adds significant amounts of high quality construction and regeneration work for the rest of the group. So 2019 was a really good year for us, and we enter 2020 with exciting prospects ahead.
So going forward, our strategy remains unchanged. It's organic growth and self-help. We're in the spaces in construction and regeneration that we want to be in. We're not planning to be in any others. We have a great balance sheet, and that balance sheet enables us to make the right medium and long-term decisions. We have a really good order book, and there's a huge momentum going through the business. So we're well set up for the year ahead.